Okay, we're going to talk about how to set up a trade. Now, I've got more than one video out there already talking about this, but in trading, we're always evolving, always trying to improve. So this is a small improvement on how we traded in the past. And in front of us, we of course have the E-mini light sweet crude oil futures, something we trade a lot, very profitable. And this is the 15-minute chart. Okay. So each of these candlesticks, left to right, represents a 15-minute segment. Okay. And I'm going to talk about how we use the 15-minute chart to set up the hourly chart and make a trade. Okay. So sometimes we'll trade 5-minute charts. We've done that in the past, and we may continue to do it in the future. But we also going to be trading hourly charts. So just something you can add to your arsenal and find out which one works best for you and what's most profitable for you. Me, just in my analysis lately, looks like the 1-hour charts could be very, very profitable. So it's something I'm definitely going to give a try. So that's why I'm sharing it here today. Okay. All right, so if we look at the 15-minute chart here, I know there's a lot of lines on here and a lot of different colors, but just hang with me here and I'll talk a little bit about what's going on. So we have a Hall moving average here. That's this blue line. Okay, blue that turns to purple. We have candlesticks, which you see here. This is a candlestick. It's green. There's one that's red. You got one back here that looks like kind of a ghostly looking white. Okay. The red line is called an exponential moving average, that red line right there. The yellow line here is also an exponential moving average. Okay, so the red line is a 3 exponential moving average. The yellow line is an 8 exponential moving average. And then the Hall moving average, you're just going to keep it at its standard. I think right now the length is set at 20, okay? And we can always do another video on how to set those up specifically, but this video we're just going to talk about setting up the trade. Now what you're going to notice is here at about 3:30 in the morning, this is on January 11th, 2019 is what we're looking at here. At 3:30 in the morning, you'll notice that this red line, the 3MA, moved over the top of the blue line, the Hall moving average. Now that's useful information that tells us that the trend may be changing direction soon. So a couple candlesticks later, the red line crosses over, or at least meets the yellow line as well. That's also important information. It's confirming that the pricing is starting to move downward after this long run-up on this 15-minute chart. This information, this is indicating that the trend may be changing. Okay. Now you could trade this chart right here if you want to. It is a little bit more risk. There's a little bit more risk because 15 minutes, things change kind of quick. For those that trade the 5-minute chart, then you know that the 5-minute chart is even worse. I mean, I shouldn't say worse, but that one, it can move really fast on you, even faster than this one. So it's up to you. You could trade the 15-minute chart if you feel confident enough to do it. But I'm going to show you something that I do. So I look at this chart, I see it's beginning to change. I see the red lines cross over to blue. I wait a couple candlesticks and I notice that the Hall moving average changed from blue to purple. And then I'm going to go over and look at the hourly chart. Okay. Now I'm on the hourly chart. And you'll notice that the hourly chart at 3 o'clock has this ghostly looking candlestick. Now that candlestick is called an evening star doji, and we're gonna have to do another video to talk about the importance of candlesticks and how to read them. But this is a very important candlestick. It doesn't happen that often, and this one is definitely telling us that a trend could be changing. So we used the 15-minute chart, came over looking at the hourly chart, and you'll notice that the red line is all on this chart an hour later still has not crossed over the Hall moving average like it did on the 15-minute chart. But it does get there eventually 2 candlesticks later, right? At about 5 a.m. in the morning. And then an hour later, you see that by 6 a.m., we can see that the Hall moving average has changed color. And then you could place your trade on this candlestick right here. In this case, you'd be doing a short sell, right? You'd be doing a sell, not a buy. And then you'll notice the whole moving average just stayed this purple color for a long time, the whole day. I mean, look at this, from 6 a.m., 7, 8, 9, 10, all the way through the middle of the day, lunchtime, all the way to the close at basically 4 o'clock. Okay? The whole moving average is moving down the whole time, staying in a downtrend. All right? Now, there are some indications in here looking at these candlesticks that might be a good place to sell. Like this looks a little bit like a hammer, and we'll talk, like I said, we'll talk in another video about the importance of reading candlesticks. But this downtrend is continuing because the whole moving average tells us it is. So, might be worth staying in. But just like we use the 15-minute chart to tell us when to get into a position, we can also look at it to help us to get out of position. So let's go back to the 15-minute chart and let's look at, from about noon on this day to about, closing. Let's go back to that. Okay, here's noon on the 15-minute chart. You can see that the red lines cross back over to the whole moving average at about, looks like it was about 9 o'clock in the morning, 9:15, went up, came back down, right? So the 15-minute chart might convince you to get out of the trade a little too early compared to the hourly chart. And that's something to consider. If you only trade the 15-minute chart, you might think it was time to get out of this trade at about 9:30 in the morning, when the hourly chart says, no, don't get out yet. So those are things as traders we have to take a look at and make decisions about what we think is the best approach for us, okay? So for me personally, I go look at the 15-minute chart to get in and then go over to the hourly chart, make my trade. If it looks like, sure enough, the trend is changing based on the red line crossing over the whole moving average and the whole moving average changing color, okay? And then I might look at this 15-minute chart again to help me decide to get ready to make an exit on the hourly chart. So the 15-minute chart right here from about noonish to closing is kind of, a little bit choppy, right? It's kind of moving sideways. There's some up and down action here, but it's not really huge. 51.3 up to about 51.7. So it may look like it's a lot on the 15-minute chart, but it's really not that much. I mean it's pretty significant. About half a point, and that's a lot of money in crude. Half a point is a lot of money on one contract. That's about $250. So you could trade that. But again, we don't want to make bad trades. We want to make accurate trades. And looking at this 15-minute chart, it's kind of choppy, hard to get in and out of trades here. So when you got this kind of sideways moving stuff going on, the 1 hour chart is useful to kind of keep you on course. See that? Now we're back to the 1 hour chart and it's still pointing straight down. Okay, one other thing I want to mention that's really important is, in addition to everything else I've already talked about the red 3 EMA crossing over the whole moving average as we see here, okay, and the whole moving average changing color, which I already mentioned. We also want to make sure we look at some type of momentum indicator. It's really, really important. Now you'll notice I'm using the Stochastic Momentum Index down here, also known as a SMI. And you'll notice that there's these two lines on there. There's like this red line that says plus 40 over here, and there's this kind of light, another red line at the bottom, sorry, that also is negative 40. You can't see it right now because this line's in the way, but it says negative 40 down here. Okay. So if the momentum is above the red line like it is right here at this point, that means it's overbought. That's what that's suggesting. That this particular oil futures is overbought. If it's below this red line, that means it's oversold. So it's really important to understand that we want the momentum to also be in our favor. Now, since we see the 3 EMAs moving over the whole moving average here, and a little bit later, like within another 30 minutes, we see the whole moving average change color, We also want to look at the momentum, and in this case, momentum is really high, right? It's way above this 40 line. That's good. We want that. Okay? If we have the momentum somewhere in the middle, and you see this kind of activity going on, you might want to be more cautious and not make that trade. Now, I'm not saying that's always true. You could still make the trade maybe, but it's really important to make sure you have momentum on your side. So in this case, we want the momentum to be above the line because it's crossing over and coming down. But it could also be just the opposite if you're at the bottom of a trend, right? Let's see if I can find one. Maybe, yeah, like right in here. Okay. You'll notice right here, way back over here, at about 1745, that the red line crosses over the whole moving average. And then about, let's see, whatever it is, 1, 2, 3, 4, 5, 6 candlesticks later, so about an hour and a half later, the whole moving average changes color. Okay? And if you look down here at the momentum, you can see the momentum was just below the oversold. And that's good. We want the momentum to be down there like that. That suggests that the sellers are exhausted, right? That they've sold all their, everything's been sold and there's no more selling to be done. Now the buyers are going to take over. Okay? So this is a really good indication right here. Everything is lining up. The red line crossed over the whole moving average. About 5 or 6 candlesticks later, the whole moving average changes color. The red line is approaching the 8 EMA here. Red approaches the yellow. They're all lining up together, right? The momentum is low and it's starting to slowly move up, coming from below -40, crossing over and coming up. So all of that works together to tell us that this trend is strong and it's going to change and it's going to move with us, and those are the kind of things we want to be looking for. So make sure you take the momentum indicator into account when you're going to make these trades. Okay. It's hard to keep videos short. My business partner wants me to keep videos to 5 minutes. It's not easy to do that, but so I hope you get an idea of just how I'm going about trading. Maybe something you can think about doing in your own trading, using the 15-minute chart, looking at the whole move, the exponential moving average, crossing over the whole moving average on the 15-minute chart, and then confirming that on the hourly chart, making your trades to get in, and using the same approach to get out. And remember, you can do this both for selling short or buying long, whichever way the trend is going, right? One last thing I want to say is we always want to consult our daily and weekly charts, even our monthly chart for that matter. But daily and weekly charts, we want to look at those at least once a day. The reason I say that is because they're going to give us a feel for the overall trend that the market is doing on a day-to-day basis or week-to-week basis. That's important because if we get stuck in a trade, we want to be stuck in a trade that's moving with the trend. So if the daily chart is showing you that the market's moving down, let's say, then you want to have a bias towards selling short more than buying long on your hourly chart. Follow me? You want to do more trades selling if the daily chart shows the market's moving down. Because if you do get stuck in a trade, at least you know the market's moving with you. If you do too much buying and get stuck in a trade with the market moving down in the daily chart, you could be in that trade a long time. Trust me, I know because I've done it. All right, so that's enough for now, and I hope you got something out of this video. We'll talk again real soon.